Hello investors, welcome back to the channel. Do you want to know about the sectors that could make you serious money this season? Most investors are overlooking these, but you won't after this. Stay with me and I'll show you how to ride the wave. Today, we'll be discussing the following topics that could have a significant impact on your investment strategy. Number 1, geopolitical tensions and their effect on Indian markets. Number 2, recent FPI inflows and what they signal for the market. Number 3, sectors that could benefit from the festival and wedding season. Number 4, the potential for a rate cut and how it could drive specific sectors. Number 5, risk of a market correction and how to prepare with a focus on stock ideas in each sector. And as always, don't forget to hit that like button and subscribe to the channel for more market insights. Also, this video is for informational purposes only and not a recommendation to buy or sell any stocks. Always do your own research before making any financial decisions. First, let's address the elephant in the room: geopolitical tensions in West Asia. The conflict between Iran and Israel has led to a spike in crude oil prices, which, as you know, has a direct impact on Indian economy, since we are heavily reliant on oil imports. This has already contributed to a recent market dip, with major indices like Sensex and Nifty falling by around 2%. But geopolitical tensions often create temporary volatility, and the war between Iran and Israel is not a new war. Long-term investors should focus on underlying fundamentals rather than panic. Despite these challenges, there is one major bright spot. Foreign portfolio investors or FPIs are showing confidence in the Indian market. In September alone, we saw an influx of 57,000 crores in equities. While there has been some profit booking and a slight outflow in early October, this level of FPI investment signals strong long-term confidence in India's growth story. However, with valuations running crazy high in certain sectors, it is important to focus in areas that are not overvalued. Let's talk about those sectors next. Consumer goods. With the festival and wedding season upon us, spending is expected to rise significantly. This means the consumer goods sector is likely to benefit, especially companies focused on discretionary spending such as electronics, apparel, and festive related items. Some companies are poised to gain from increased consumer spending during the festive season. However, always remember to evaluate the current valuations. Don't overpay for growth, as some stocks may have already priced in the season's sales anticipation. Let's look at some stocks here. Asian Paints, for example, has already priced in the seasonal spike in prices. Since April till end of September, it had given a 25% run-up. Lately, it has fallen by around 8%. So does it mean we can still enter at this dip? Let's find out. You can see the price of Asian Paints has been moving in a range since 2021. This is the reason the price fell down on hitting the upper margin of that range, because it did not have good data to support its breakout. As you see, the company is not really generating great profits, and also FIIs and DIIs have moved out their money. My assumption is it will continue moving in a range till the company fundamentals starts becoming more attractive. We can still make some money if we are cautious and enter at the bottom of the range to see a 20 to 25% gains. Let's see Indigo Paints now. It has also given a 26% run up since April, but the long-term technicals looks good. This stock most likely will break out on some good news or strong Q2 data or FPI inflow. Dabur is an interesting stock. Since 2015 till 2021, the stock has continuously given good returns and has risen by 180%. But after that, the movement has been muted due to multiple factors. Dabur's balance sheet is looking good and it's faring good with respect to its peers. The upcoming quarterly results coming up in the end of October is expected to show good profits. You can continue doing SIPs in such type of stocks. You can do your own research on Hindustan Unilever, Titan, Godrej Consumer Products, and let me know in the comments what do you think about them. Now let's move on to another potential tailwind, the possibility of a rate cut. With inflation stabilizing and the RBI considering a 25 basis point cut, sectors like private bank, NBFCs and housing finance firms stand to gain. Lower interest rates can stimulate demand for loans, especially in home financing, personal loans and even auto loans. Companies like HDFC, ICICI Bank and Bajaj Finance could see increased activity if borrowing becomes cheaper. Let's take a look at HDFC Bank. It is trading at 2021 levels. It has given only 13% run up in 3 years, while the average 3-year returns pre-COVID was 107%. A rate cut by the government can excite the FPIs to put in more money in such large cap safe bets and can have a huge stimulus for such stocks. Do your own analysis for Bajaj Finance, ICICI Bank and Axis Bank and ask me in the comments if you have any doubts. Additionally, the housing market could get a boost as lower interest rates often encourage home buyers to take loans, benefiting housing finance companies. The good news is that India's growth outlook remains strong. The RBI's projection for 2024-25 shows GDP growth at 7.3%. Even with global uncertainties, our domestic market has underlying strength supported by consumption growth and government spending. But let me stress again, while the long-term prospects are good, valuations matter. Overpaying for growth, especially in an overheated market, can erode your returns. Focus on sectors where there's room for growth, but the price you're paying today isn't overly inflated. It would be unfair if I didn't mention the potential downside risks. There's a growing possibility of a 10% correction in the short term, driven by global volatility, profit booking, and geopolitical tensions. While Indian markets have remained resilient, it's important to brace for some volatility. So, where should you focus your attention as an investor? Consumer goods could be a strong bet for the upcoming festival season, but be cautious of overvalued stocks. Private banks, NBFCs, and housing finance firms are sectors to watch, especially if RBI announces a rate cut soon. Long-term growth prospect remains solid for India, but expect short-term volatility due to global tensions. While it's never a bad time to start investing, consider keeping some 20% cash aside to take advantage of any dips or corrections. And that's the market update for today. If you found this video helpful, make sure to hit the like button and subscribe for more market updates. The information provided in this video is only for educational purposes and does not constitute any financial advice. Please consult with a professional before making any investment decisions. Until next time, stay informed, stay invested.